Hello everyone, and thanks so much for joining me on our next lesson for the research theme China and the global economy. In this session we're going to be looking at the key consequences that the Chinese economy has experienced as a result, the direct result of the economic growth that they've enjoyed over the last 40 years. It has of course had some big downsides. Okay, let's take a look. Right, first up, is this process of rapid industrialization that has been undertaken in China has been accompanied by a mass migration, the largest human migration in history, of people living in rural areas moving into the eastern seaboard and those coastal regions. Now, as that process has taken fold, urbanization has ensued, and the cities have become much larger. They've grown quite explosively. Now, a direct result of this is the impact on negative externalities that has occurred at the same time. So pollution, air pollution, Shanghai, Beijing, they're renowned for their poor air quality. Then you've got other issues surrounding this urbanization, these big sprawling cities, such as congestion, that you've got poor quality housing for migrant workers, and the burning of fossil fuels in this process of industrialization has further aggravated and exacerbated those negative externalities, together with resource depletion in some mining areas and so on. Next point, just focusing in on the inequality that has occurred in China as a result of the economic growth here. So just to put this in context, we can see the Chinese Gini coefficient has risen from 1980 at a level of 0.3 to what seems to have been about a peak actually of 0.47 in 2015. It seems to be just coming down a little bit at the moment, so it seems like this may actually have been a peak there. Now, as I see it, really, there's three clear reasons as to why this has occurred. The first one is the fact that there's massive regional variations within China. In the rural areas, people still live in relative poverty. Not absolute or extreme poverty, but relative poverty, while those urban dwellers, of course, are likely to earn far more because they're more productive, and therefore their marginal revenue productivity will be higher. So that's our first point. Secondly, that when China began its transition to becoming more mixed economy based and allowing a function for the market, the state controls were removed from the labour market, and this has meant for those migrant workers coming into the big cities, their wages, of course, have been very low, and because there's been such a plentiful, elastic supply of those labourers, it's meant that wages continue to stay quite low for quite some time. Now, we'll look at this point again in relation to our third point here. And our third point again considers the transition from command-based, state-controlled and state-owned assets to assets being held in the private sector. So those people and firms that invested in buying assets, whether it's land, whether it's capital and capital goods, factories and so on, those people would be far more productive in terms of the earnings that they would generally be able to generate on those assets. Now, then they would employ, of course, these migrant labourers under this free market sort of conditions in the labour market. So therefore, there would be a wide discrepancy between the earnings of asset owners and the low-skilled or no-skilled migrant labourers. Okay, so our third point here, and it's a technical one. This might be one that you choose to avoid, entirely up to you. Okay, and what we can see here is that there has been a large current account surplus in China for many years. Now, this of course, generates lots of jobs and it generates lots of income for the Chinese economy, and that helps to boost up aggregate demand. And those are the good points about this, but it does have a downside, and that downside is that it can increase, well, it does increase the money supply unless the central bank tries to do something about that. So they can choose to actually engage in a process to reduce the increase in the money supply that this would naturally bring. And this is a process called central bank sterilization. If you take the increase in the supply of renminbi, so there's a greater quantity available of those renminbi. Now, what the central bank would then choose to do is invest in dollar-denominated assets. So, for instance, they might invest in US Treasury bills. Okay, so they buy dollar-denominated US Treasury bonds, and China has become the largest holder of US Treasury bonds. But at the same time, it means that we've still got this issue. So while the central bank has converted their renminbi into dollar-denominated bonds or debt in the US, there is still a surplus or an excess supply of renminbi. And this, of course, would pose problems in terms of overheating. So what the central bank may choose to do as a direct result of that is that they may choose to actually increase renminbi denominated bonds. And by offering those renminbi denominated bonds or Chinese government debt, they can be purchased by largely Chinese SOE, so state-owned enterprises, as well as some individual investors in China, and it is predominantly debt held by Chinese firms and investors. So that helps to actually dampen the impact of the increase in the money supply. So that's a complex process. That may be something that you choose to look into, but alternatively, you might choose just to kind of skip that. All right. There is another point in relation to this, of course, and that is that a large current account surplus would normally lead to an appreciation of the currency. Well, if you're converting your excess renminbi into dollar-denominated debt, you can see that you're going to reduce your demand for renminbi. So as a direct result of that, you will cause a depreciating effect on the currency, and that has helped to maintain China's competitiveness at the same time, while some Americans might call them currency manipulators. Okay, final point is just that we've got increased total debt that China has seen grow quite rapidly. So from 2008 through to 2016, this has grown really quite quickly, and that has concerned a number of analysts and investors. At the same time, of course, this is funding a lot of capital expenditure, or it could be funding further investment in capital goods to help produce, increase the productive capacity of the economy in the future. But yes, this is a slight cause for concern, and we will look at that a little bit later on. Okay, but otherwise, that's it for today. Thanks ever so much.